Good evening, Nick Inman from VolumeProfileTrader.com on Sunday, July 15th, and this is a little bit late as far as the weekend update, but better late than never. I had a really busy weekend, and literally this was my only time that I got to do this, so here it is. I think Friday was a pretty obvious day in the market. We saw consecutive lower lows in the market for 1, 2, 3, actually, well, yeah, 1, 2, 3, 4, 5, 6 straight days. And then that finally turned around on Friday, well, actually Thursday, where we caught a low and bounced and had a nice 2-day reversal rally in the S&P in the broad market, and that is it was a little obvious just because you have 6 straight days of downside momentum, and then going into the weekend, you're not going to get shorts who were short on day 1, 2, and even 3. They're not going to stay short going into the weekend. They're going to cover their position some. Also, others will find opportunity when the market pulls back, especially to the levels that we saw. Let me zoom in a bit. Remember, the top of last month's high volume area, which was 1328, the market tried to bounce there on Thursday. I'm going to zoom in a bit. Market tried to bounce there Thursday. It was good for a 10-point trade, but that's it. And that trade ended pretty quickly. Being the end of the day. The next one was 1319. The low was put in at 1319.75, and if you were looking on Twitter, I posted that I was buying the lows, and sure enough, it ended up being a great trade. My first target was 1342, and it ended up pushing through 1349. Well, let's call it 1350. I think this is a bit of an overshot to the upside. I would be expecting a little reversion back down to at least 1342. Right now, the futures are trading 1348.75. So pretty good bounce off of last month's high volume area, good for a trade. And what I did was into this strength, I was long my two biggest positions, long Apple, long SPY. What I did was I flattened on about 75% of my Apple position, so now I just have a core position again. And my SPY position, I flattened it again 75%. But I also, once I took profits into the 1342 level. Once I saw that 1342 wasn't the end, I bought back half. So relative to the position I had on Thursday, what I bought at the lows, I basically have half of that now. And the reason why was because I also put on a QQQ short, and that was to hedge against any, me being wrong, and, I wanted to avoid losing more money than what I would have to, if I were wrong. Basically, that SPY long and that QQQ short are, it's a little bit of a counterbalance now, which is okay, which pretty much makes me market neutral, and I don't really have an opinion on the market. I would suspect if the market wants to go higher, we'll get an opportunity at least around 1342. We may go back and test 1328 or so. I could be wrong, but you never know. And if we do continue higher, I would be looking at this high volume area up at this 1364 level. 1362 to 1366, that level is what I'd be looking for the upside. Downside, like I said, 1328, 1344. That that's definitely going to be hit. But just putting that out there. On the longer term, still looks like we're bouncing within this range. But let's look at some other names just to get an idea, a broader view. Okay, let's look at the NASDAQ. This is a good example, and this is probably one of the reasons why I chose to short the NASDAQ. One, it pierced last month's point of control, came down to the bottom of the high volume area, not a big deal. But coming into this high volume area here for the current month, we should see a little bit of resistance. Could be a good opportunity for a lower high and maybe a rollover. So what I want to do is, right now, my short QQQ position is slightly in the red. I'm sure my cost basis is somewhere within this, call it 25 70, 25.65 level, which actually isn't much off current price. But my SPY position is profitable. So what will happen is I will end up being stopped out of that SPY position, and if the market does roll over again, that QQQ position will become profitable, and it will just go to a trailing stop type of position, and that's what I want to be in. I just want to keep trailing my stops. When they get hit, then naturally my portfolio is going to shift, and if I'm accurate with my support resistance levels, and accurate, or not accurate, but consistent with your trailing stops, being active at high volume areas, whether it's down here at the bottom where you're bound to see some type of reversion, some type of snapback, or back at this high volume area where you may want to hedge up, maybe you want to load up some shorts. No, knowing that if it goes higher than this high volume area, then you get out or you get stopped out, and that's why you have a couple longs on. You want to stay active when the market's going up and down like this. You want to stay active on both sides of the market. And let's say, for example, the market continues higher, and I will scale down. I won't scale out, but I will scale down on my QQQ short, and look. Therefore, I'm not losing a lot of money on it, and therefore, stay involved on the QQQ so I can add back to it just in case. You would hate to unload your short, your hedge. That's what it essentially is. You would hate to unload it, and then the next day the market turns or something. So, usually it's right, especially in a sideways market, to have some type of hedge. And as much as I want to say this market's going to break out higher, there's no real reason for it to, and that's what I think is the important thing. The Dow, great bounce off last month's point of control. It's also the point of control for the last 90 days. Now this looks a little stronger, kind of looks like the SPY, going through current HVA, high volume area for the month. Looking at last month's value area, let me zoom in so we can see. Last month's value area, you can see it was a top, I guess you could say 3 times here. Here we are for the 4th time. I wouldn't put too much emphasis into this, as light volume Friday, shorts getting squeezed, that's that type of thing. That's what you expect. So hopefully you made some money off of it by even going off of Twitter, but it's giving you opportunities to be involved in the market. So let's talk about why I chose Apple as a long. I think I did this on Friday or on Thursday night, but it closed this gap here and had a nice reversal off of these levels, and you just take it for a snapback, and that's about it. Apple's usually pretty volatile, which is unusual for something that with that much of a market cap, but that's the way it goes, and you don't fight the tape. So also gold, another thing. I covered my hedge on Thursday. It was a good cover, but I think those kind of situations are pretty obvious. And guess what I did? on Friday into the strength. It was actually close to the end of the day. I put that hedge back on because I don't want this to continue to roll over. I'm basically operating off of this high volume area here. Depending on which way we go, if we start to go higher, I'll lighten up on that hedge and vice versa. So, alright, oil. I think you want to watch this here. This actually could be a decent trade. What I'd be looking for is a potential move back down towards 85, 84, basically these lows. See what's going on. What's really intriguing, and I'm not putting too much emphasis on this, but you have point of control for the month, and you have two moving averages, which there's nothing special about them. All right here, so maybe 85 is your level to look maybe for a potential breakout long on oil, or one thing or the other. But I would just be watching it on a daily chart. It looks pretty interesting, and the only reason I say that is because we could have not fibs. I see this moving average coming straight down. We came up, well, we made a double bottom, came up, here's the top of the range. This is definitely the top of the range. There's no doubt about that. But you could see some type of, double top here, not double top, but, lower high, whatever, weakness. So if you start to see some selling, maybe it's an opportunity to flush back down to the bottom of this range. But overall, I think you just continue to play these ranges. If you're looking at the S&P, I really don't have an edge right now. I'm just staying involved at high volume areas and being active, because that's really what it's about. And you want to realize the market's not trending right now, so there's going to be opportunities on both sides. And when it does trend, and it could be soon, it could break out to the upside. We continue to make higher lows and higher highs right now, but is this some type of prelude to a basically a fall in the market, some type of market drop? And it could be. You just never know, so we'll have to wait and see. But I think that your job as a risk manager is to stay active, take your opportunities when you have them. If you're wrong, you get out. And if you're right, you let it ride until it hits some type of support or resistance, and then you scale down. And you don't get all the way out because you want to stay involved, but you don't want to. You want the market to hit your targets, the underlying to hit your targets, and then you scale out. You stick with your plan and you trade your plan. So, anyways, I hope this helps, and I'll talk to you tomorrow.